Hey traders, TG Watkins here. It is over the weekend, so July 16th when I'm recording this. You guys will see this on Monday, I believe, and wanted to go over what I think is going to be, or what we should be looking for with the market. So this is the SPX going all the way back to 2008, and so I want to show you that even before a big drop or whatever like that, what happens is we tend to get these oversold conditions, and then you can see that price bounces. Now, and then you can see again oversold, and then we get a bounce. And I think we're somewhere getting ready for one of these situations. We've already kind of done this situation where we crossed down below the weekly 50 currently, and there might be an opportunity to where we're kind of running into this situation. And I say that because we currently, and let me show you this. I took a screenshot so we can actually look at this. So here is what's current. Like this is our current example on the SPX weekly. And you can see that we're down here at the lower third ATRs, kind of like that too. And then you can also see that we're coming up on the weekly 200, and we have a large gap between price and the weekly 50. And I've been talking a lot to the subscribers that price does not like to stay away from its moving averages for too long. And I think that that weekly 50, at some point, price is going to want to get closer to it. Whether it's all the way to the 50 or just closer to it like that, we're not sure. But I think the first step is that we should expect price to come to the weekly 21, even like that. And the weekly 21 is up here, a little over 4,000. It could probably go a little bit higher, maybe 4,100, something to that extent. And I think that's our first thing. And then we'll have to decide what comes next, if it goes up closer or, comes down after that. But I think that is something that we should be looking for. And if we then take a look at 2000, let me kind of slide over here, and you can see more or less the same thing. If I zoom in like this, and then if I pull up the previous from, there we go. And what we can see is, 21, 21, 21, 21, I call it 21 in there, even here, 21. And even this one, I guess you could say, but that was the reversal. So I look at this and I say, well, gosh, we're pretty extended to the downside here, just like we've kind of been extended there, definitely extended there, and definitely extended there. And so I look at that and say, yeah, this is we're on the lows for a pretty long time. And even when they bounce, they get closer to the 50, closer to the 50, closer to the 50. So the fact that we have a really big gap here between price and the weekly 50 and the weekly 21, I think that we are getting to the point where we're probably trying to hammer out a bottom. We had the CPI numbers, we had the PPI numbers. Both of them were bad because inflation was higher across the board. But you know what? Look at how we ended the week. We ended in the higher range of the weekly bar. So I think that this is something we should be looking for. It does not mean that it's going to be easy, because there are definitely stocks that are still going down, even when the market is going up right now. So you just have to find the right stocks, figure out what's going on. If you want, you can trade the indexes and see if they just kind of go from point A to point B. Then we'll figure out where they go next, and if there's even a point C at some point. So, all right, guys, keep that in mind, and let's see where we go for the next week or two. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.